Yeah.
Okay, fine. So we're doing Feb March 2023, paper 12. Can you tell the first question, please?
Yeah. Why did Amitva prefer to form a partnership with Lenny rather than set up as a sole trader? Uh, Amit was certain they would work without disagreements. Lenny had a different area of expertise to Amitva. The financial statements of the partnership are not shared publicly. The legal requirements in setting up the business would be reduced. The answer is B.
Okay. Come on. Read this.
A credit customer cleared a debt of $600 after deducting cash discount of 12. Uh, would How would the customer account appear in the books of supplier after
Okay,
the
fine.
payment has been
So
done?
the supplier,
Yeah, so
in the
it would be
books of supplier,
yeah,
talking in the books of supplier customer account. So we are talking about which account?
in the books of supplier we're talking about account matlab PLCA.
No, darling. In the books of supplier, you're talking about the customer account.
Oh, okay, like that, yeah.
You're talking about which account?
Customer account.
Customer account resembles what? SLC or PLCA?
Customer account is the SLCA.
SLCA always has which balance?
Debit.
So 600 would be on which side?
Debit side.
So 600 is what?
Debited.
Balance or what?
Balance brought down of the customer.
Okay, then
Then bank and discount allowed would be on the, sorry, for sales now it is, yeah, discount allowed, it would be on the credit side.
okay. So which one you would take?
Option number
Balance
A.
taken down, debit side is two things.
Option number A.
Option number A. Okay, fine.
Yeah.
Go to the next one. What is
What is
the
the advantage?
advantage of keeping a full set of double entry books?
It enables the bookkeeper to check the bank statement for errors and omissions.
Only that is the advantage of keeping a set of double entry books of accounts.
Yeah, from all this, so yeah.
So you will check only the bank statements. You
No, you will check
double
like,
entry to check the banks. Only you want to keep double entry bookkeeping so that you can check bank statements.
no, not only that, to like remove any errors and like ensure that assets are not overstated and all.
This is only talking about bank statement.
Oh, okay.
This is not the reason why we make double entry books, right?
Yeah.
Okay. We
So
don't make
that
entry for assets being overstated or following the business entity concept.
yeah, we don't.
Double entry is made by so that we have account balances available throughout the year.
Okay.
Next one. What do you want? First, see this.
You need to find the capital account balance at the end. So I made the capital account in this.
Yeah.
So capital at start is 85,000, which would be credited.
Hmm.
Then additional capital 30,000, which would be added over here on the credit side.
Hmm.
Okay. Then drawings would be debited.
Hmm.
Then the loss would also be debited, 22,000.
Hmm.
Then then the closing balance would be as per the credit side, which would be 115,000.
Hmm.
And the closing capital balance is 78,000. So option is C.
Okay. Next one.
A business had incorrectly recorded a vehicle purchase as a vehicle repair. Okay, so how does this error affect the financial statements? So vehicle purchase is recorded as repair, so that means the asset would be
Hear you
understated.
properly.
Vehicle purchase is recorded as vehicle repair so that the asset would be understated.
So that means a capital expenditure is treated as a revenue expenditure.
Hmm.
So capital expenditure, that means an asset is treated as an expense.
Yeah.
So what about the statement of financial position?
Uh, Assets would be understated
Hmm?
and profit would also be understated.
Okay, assets would be understated, profits would be understated. So which one?
D.
D.
Hmm.
Okay. Next
This
one.
one I'm this one I'm not sure about, but you need to find out the carrying value of non-current assets at the end of year two. So
Okay.
the
At the end of year one, what is the carrying value?
360,000.
Hmm?
360,000.
Hmm. Okay.
Yeah.
Okay.
Then after that,
At the end of year one, the carrying value is 360,000. Okay.
yeah,
After that, assets were sold.
yeah,
Original cost is 100,000, depreciated at 40,000.
yeah,
Okay. So that means what is the carrying value of this asset?
60,000.
60,000. This asset is sold, right?
Yeah.
So I'll remove it from here.
So it's 300,000 left.
300,000.
Hmm.
Depreciation charge for the remaining non-current assets is how much?
30,000.
So depreciation for remaining assets is 30,000.
So 270,000 would be the carrying value.
Okay, fine. Understood, right?
Yeah.
Go to the next one.
1 minute. Which the cost of repainting a property was debited to the property account. Which type of error was made? Commission.
Darling, repainting a property is which expenditure?
Repainting a property capital.
Okay, property is which expenditure? Repainting a property is capital expenditure.
So, yeah, because it's done only once, na? Like it's not Hamisha.
Repainting.
Okay, sorry, it's a revenue
Painting
expenditure.
again. Which expenditure?
Revenue.
Revenue expenditure is treated as?
Capital expenditure.
Okay, which error?
Principal?
Go to the next one.
This one I didn't understand, miss. This I'm not like, I don't
What
know.
is the correcting debit entry to suspense account? Okay, so
Huh.
you want the rectification entry. Cash payment of 630 for rent, credited in the cash book, debited to irrecoverable debts account. So instead of debiting rent, you have debited which account?
Uh,
Irrecoverable debts account.
yeah.
Tell me, will this error have any effect on the trial balance?
Yeah.
Instead of debiting rent, you put it into irrecoverable debts. Instead of
No,
debiting
it's
rent, you put it into irrecoverable debts. Will this error have any effect on your trial balance?
no because I think that debit ही तो हो रहा है amount, so no.
Fine, no.
Hmm.
Provision for doubtful debts, provision for depreciation has been overcast. PDD, provisions as which balance?
Provision as a credit balance.
If it is overcast, then what do you do? Which side?
Debit balance. Debit.
Opposite side. So the
Yeah.
rectification entry for this would be provision for depreciation debit.
Hmm.
How much?
960.
And suspense,
Credit.
960. Are you with me?
Yeah.
Okay, fine. Read the next one.
The purchase ledger control account had a balance of 48,300 that has been included as a debit balance.
Okay. A PLCA normal balance is how much?
PLCA normal balance is credit.
Credit balance. So a credit amount, you have put it in the wrong side.
Hmm.
So what is the rectification for this?
Putting it in the right side.
Putting it in the right side, correct side, but double amount or same amount?
Double.
So if you put something on the wrong side, then you put it on the correct side, but which amount?
Double amount.
Double amount. That means for this, you will do PLCA credit.
Hmm.
How much? Double amount to do?
48,300. 1 minute. 96,600.
And suspense?
Credit. PLCA suspense debit.
How much?
96,600.
Okay, fine. Now you have a suspense debit of how much?
96,600.
And you have a suspense credit of how much?
96,600.
You have suspense credit of 960.
Oh yeah, sorry, my bad.
Debit, suspense, credit.
Hmm.
So you will subtract and it will be on the debit side.
Because that amount is more. Huh?
So 96,600 minus 960. What
It's
is
95,640.
option
C.
with me?
Yeah.
You're sure?
Yeah, yeah.
What is the double entry? No, read the question, please.
What are the benefits of 1 minute? What are the benefits of preparing a bank reconciliation statement? Acts as a deterrent to fraud, identifies out of date checks, prevents the business going into overdraft, provides the correct bank balance to the financial statements. Okay, so the only thing wrong over here is this acts as a deterrent to fraud.
DRS is prepared when the balance as the cash book is not equal to the balance as per bank statement.
Yeah,
When you prepare this, you reconcile. So if any fraud is happening, can you not prevent it?
you can because you're reconciling.
Yes, so it is a deterrent to fraud.
Oh yeah, sorry. Identifies out to date also it does.
And it also provides a correct bank balance for the financial statements.
So 1, 2, and 4, na?
So option,
B.
go to the next one.
Okay. At the month end, a business bank statement showed a credit balance of 12,697. This did not agree with the cash book balance. Okay, so a check received of 7170 was,
Wait. You have balance as per bank statement.
yeah,
How much?
overdraft 1 to 6,
It's a
12,697.
positive balance, right?
Yeah,
It's not an overdraft, it is a positive balance of
okay,
12,697.
7. Yeah,
And they want you to arrive at balance as per cash
cash
book.
book.
So you start with balance as per bank statement and they want balance as per cash book. Are you with me?
Yeah.
What comes in the BRS? Do you know that?
Yeah, when you have to add uncleared checks and subtract that.
There in the cash book and not there in bank statement
Yeah,
will come in BRS.
okay.
Okay, fine. Come on. Read the first one.
A check received 7170 was entered as 7710 in the cash book.
Okay. That means cash book had to go up by 7170.
Yeah.
But cash book went up by 7710.
Huh.
Cash book has gone extra up by how much?
Yeah. 1 minute. 540.
Cash book has gone extra up by 540.
Hmm.
But cash book is extra up, but bank statement is up by how much? 7170, correct?
Yeah, yeah.
From the bank statement, you have to go to the,
Cash book.
from the bank statement, you have to go to the cash book. So what will you do?
You will subtract 540.
So what will you write?
As per cash book. Now I don't know what that also.
Paid in 2,400. That means cash book is down.
Yeah.
Statement is up.
Hmm.
So from the cash bank statement, if you want to go to the cash book, so you will subtract
Huh.
2,400. This is the
Hmm.
unpresented check
Yeah.
or uncleared check.
Yeah,
Okay,
yeah, yeah.
read the next one.
A standing order $450 was recorded in the cash book but had not been paid by the bank.
Then what will you do?
Subtract again.
Then,
Bank interest payable of 642 had not been recorded in the cash book. So you add.
now do this. 12,697 minus 540 minus 2,400 minus 450 plus 642. So what's the balance?
1 minute, I'm finding out. 9949.
But you don't have this.
I think my calculation is wrong. This one.
Let's check again. Check of 7170 was entered as 7710 in the cash book. So you've entered extra in the cash book. So you will remove this. 7710 minus 7170, 540.
MS for this sum.
You have paid in check 2,400. So you have to add back, right? Cash book was less and bank statement was more. So you have paid in check but not cleared. So you have to subtract only. Now listen to me. Your business bank statement has a credit balance. In the bank statement, the credit balance is a positive bank balance. Can you please switch on your video?
Yeah, 1 minute. Let me stop my screen share. Oh.
Okay. So this is a positive bank balance. I need to know my cash book balance before the corrections were made. Are you with me?
Yeah.
That means in the BRS, there is the first thing that we make is the updated cash book. And the second
Hmm.
thing that we make is the BRS. We
Okay.
are going to start in the BRS with balance as per bank statement. What is the balance as
Okay.
per your bank statement?
12,697.
12,697.
Yeah.
Okay, fine. Now understand, they want which balance from you? You have a balance begin down here and you have a balance close down here. They
Okay.
want which balance from you?
They want the balance which was made before the corrections.
That means they want this balance.
Yeah, begin down.
Okay, fine. Come on. In the bank reconciliation statement, there are only two things that you do. You have unpresented checks and you have uncredited deposits. If unpresented checks is there, you're starting as per balance as per bank statement. So
Yeah.
unpresented checks would be deducted.
Hmm.
Unpresented check would be deducted and uncredited deposits would be added.
Yeah.
Are you with me?
Yeah.
Then you will get balance as per cash book
Cash book.
and this would be this balance closed down. Are you with me?
Yeah. Huh.
Are you sure?
Yeah.
Okay, fine. Read the first entry.
A check received 7170 was entered as 7710 in the cash book.
So this is an error in the cash book.
Yeah.
Where should it come, in BRS or in cash book?
In cash book.
So in the cash book, you have what you've received is 7170. That is a lower amount, but you showed a higher amount over here.
Yeah.
So you will correct it and put it over here.
Huh.
How much? 540.
540 minus.
Yeah.
Hmm.
Are you with me?
Yeah.
Now read the second one.
A check paid in 2400 had not been
What do you
cleared
mean
by
by
the bank.
paid in? What do you mean by paid in?
That you've paid it.
Check paid into the bank. Check paid into the bank. That means you have received this check.
Oh, okay. So you have to add this.
Yes, so this is uncredited deposits, right?
Yeah, okay, got it.
So this is uncredited deposits.
Hmm.
Yes?
Yeah.
And this is unpresented check, standing order.
Yeah.
Are you with me?
Yeah.
Okay. Bank interest had not been entered in the cash book.
So this you have to subtract again.
Updated cash book.
Huh.
Okay. So this is something that you will do in the BRS and this is something that you will do in your updated cash book.
Hmm.
So can you tell me the balance as per cash book, which would be the balance updated cash book?
1 minute, I'll tell you.
It will be 12,697
Minus 450 plus 2400.
1,200.
14647.
This is the closing balance.
Yeah.
And I want the cash book balance before the corrections.
Yeah, so I have to add these two. Plus 642 plus 540. 15,829.
15,829. We did everything correct. What we did was before this paid in, we treated as
Expense.
we treated as expense.
Okay, I understood
So
now.
what we did before was that we took 12,697.
Hmm.
Okay. Then we minus this 540. We minus
Yeah.
2,400, but we had to add 2,400. This
Hmm.
is the only wrong that we did. Okay. It's a reading error. Go to the 11th one. Tell me what you did.
Which statements identify the advantage of using a purchase ledger control account as a part of the accounting system? Uh, Compensating errors within the purchase ledger can be found more easily. Errors of commission
Is
within
this
the purchase
correct or
ledger.
wrong?
This is wrong.
Okay.
Errors of a commission within the purchase ledger will be deducted. Correct.
This is correct.
No, sir, this is also wrong. My bad. The honesty of staff working on the accounts of trade payables is checked. Maybe this can be correct.
Yes, because we are keeping a check on our staff. That is why the same account is made by two different people.
Yeah, and the total amount owing to trade payables can be ascertained quickly. Yeah, so it's 3 and 4.
Okay. What is the question that they want?
Oh, they want the in this they want the SLCA. So in this I made the normal SLCA account. The
Hmm.
balance brought down is 28,500, which I wrote on the debit side.
Hmm.
Then dishonor check had not been entered, so I entered it as 300
Which side?
debit side.
Had been entered on the credit side of SLCA.
Oh, sorry, so I have to enter it at 600 now because it's all double karke.
Hmm.
1 minute, I'll just change that. I entered it at 600. Then contra entry had not been entered, so I entered 500 there on the credit side, and discount allowed also 700 I entered on the credit side.
So it would be
1 minute.
500 plus 600 minus 500 minus 700. So 27,900.
Yeah, 27,900. The option is B.
Next one. What do they want?
Miss, this I didn't understand at all.
They want the figure that should be included in the statement of profit or loss account. And this is the inventory of stationery. So they are
Yeah,
asking to make a stationery account. Stationery account you treat as in-out, if you remember.
stationery account is an expense.
It's an expense account, but we treat it as a real account. Whatever is coming in on the debit, whatever is going out on the credit.
Going out of credit.
Okay, yeah.
Yeah.
Okay. So now your stationery inventory is how much?
Stationery inventory is
Had an opening
3740.
inventory of stationery at 3740
Yeah.
and 1,200 was owed to the supplier of stationery. During the financial year ended 31st December, a total of 38,800 was paid for stationery. So what you pay, what you're coming in will go over here, what you're going out is coming over here. At the same
Yeah.
time, it is an expense account. So O D. Are you with me?
Yeah, Popo B.
Okay. So you have an opening balance of stationery of 3740 and 1,200 is outstanding for stationery.
Yeah.
During the year, a total of 38,800 was paid for stationery.
Hmm.
And some old stationery is sold to staff. That means some stationery is also going out.
Yeah.
Stationery in out, and at the same time, it is like an expense account. Are you with me?
Yeah.
At the end of the year, the business has an inventory of stationery valued at cost. The closing balance of stationery would come over here.
Hmm.
And closing, you also still have to pay
Yeah.
800 to the suppliers of stationery. 1,800.
Yeah, got that.
So what would be the amount that would come in the income statement? Check. So this is 1,800 plus 38,800 plus 3,740. So it is 44,340. 44,340 minus 1,200 minus 240.
38,700.
minus 4,200. 38,700. So the answer is option C.
Hmm.
What you should remember is that in and out of stationery should be taken into consideration.
Yeah.
That means this is the opening balance of stationery and this is the closing balance. And
Yeah.
at the same time, this is an expense account.
Yeah. Okay.
Be treated as POPO B.
Hmm.
Rest all is the same.
This I know. This I say.
Say,
So Popo B, you have to do expense account का first that.
tell me
Okay.
the requirement of the question.
You have to calculate how much rent has to be charged at the year end.
Okay.
So Popo B,
Hmm.
rent paid in advance is prepaid. So 4,000 will be on the debit side first day.
Hmm.
During the year, the rent paid is 41,000, which will be bank. So 41,000 will come there. And then same last year over credit side, rent paid in advance 7,000, so it'll come. It's you have to close the account. So 45,000
Hmm.
minus 7,000, which is 38,000. The answer is B.
Okay.
Which item would affect a sole trader's gross profit?
Can you tell me
Carriage,
actually what will come
yeah,
in the gross profit? Everything like that is affecting the cost of sale.
cost of sales. So carriage inwards and trade discount received. So it will be 1 and 4, which is A.
Okay.
John and Mary are in a partnership. After the first year of operation, the current account of both partners had debit balance. What might cause the debit balance?
What do
Okay.
you mean
So
by debit balance?
debit balance on the current account.
Okay. So on the credit side, you have the profit, share of profit,
Yeah,
whatever.
salary and all.
Yeah. And on the debit,
Drawings and loss. So it's 1 and 2 of option B.
okay.
Yeah, this one I didn't understand.
Okay. We nothing now you want to find the profit for the year. So you start with your appropriation account.
Okay.
So you have your profit before appropriation.
Hmm. Which is
Add
a loss.
partners. 1 minute. Add income
Uh,
from partners
hmm.
with interest on drawings
Yeah.
minus expense towards partners.
Hmm.
That would be your salaries,
Yeah.
interest on capital.
Hmm.
And then you will get your residual.
Okay.
Are you with me?
Yeah.
Start putting. You have a residual loss of 3,000.
Hmm.
Are you with me?
Yeah. Yeah.
Total salaries to partners is 5,000 and
Five.
interest on capital is 27,000.
Huh.
So total is
Minus
27
7.
plus 5, 32,000.
Yeah.
Interest on drawings is how much?
Uh,
700.
700.
Now go reverse.
So 3,000 plus 32,000 minus 700.
3,000 plus 32,000 is becoming how much?
35,000.
Okay. So from 35,000, if you remove 32,000, you will get 3,000. Am I clear?
Yeah. Yeah. Okay. So the answer is 34,300 because you have to subtract.
Yeah.
Yeah.
1 minute.
Yeah.
You have to go reverse, darling.
Okay.
Okay, if you're going reverse, you have a minus. If you're going reverse, you have a minus 3,000.
Hmm.
Okay, minus 3,000 plus 32,000.
Hmm.
Minus 3,000 plus 32,000. How much do you get?
29,000.
How much?
29,000.
29,000. Now reverse again. Minus 700.
28,300.
28,300. Be careful of the plan that one is.
Okay, got it.
So now go to the 18th one.
A limited company intends to issue shares at a price above the par value. Which items, apart from the bank balance, will be affected by the share issue? Share
Hmm.
capital, capital reserves, and revenue reserves above the par value. Share capital and capital
But a
reserves.
limited company wants to issue shares above the par value.
Yeah.
Which items apart from bank balance would affect the share issue? That means they want to issue shares at premium.
Hmm.
If they are issuing shares at premium, what is the journal entry?
Issuing shares at premium.
So money is coming in, right?
Yeah.
Bank debit, share
Hmm.
capital credit, and share
Yeah.
premium credit.
Yeah.
And share premium is what type of a reserve?
Capital.
Capital reserve. So now they want to know, apart from bank balance, which item would get affected?
Share capital and capital reserve.
Option
B.
next one. What do they want?
The following information is available for a
What do they
limited
want?
lab.
First, see what do they want.
Total equity.
Okay, what is the total equity made up of?
Uh, Own funds, borrowed funds.
Equity,
Yeah,
share
own funds.
capital, reserves and surplus,
Own,
retained earnings.
sorry. SOC.
Okay, so
Hmm.
you have your opening equity,
Yeah.
you have profit for the year. What will you do? Will it increase it?
Yeah, added.
Will the dividend pay reduce it?
Subtract. Yeah.
Proposed dividend, will it have any effect?
No effect.
No effect. Very good. Then there is a bonus issue of 20,000 shares.
Hmm.
So 20,000 will increase the share capital
Yeah.
and it will reduce what?
Retained earnings.
Retained earnings, that means it will reduce the profit for the year.
Yeah.
So that means it will increase 20,000 and it will decrease 20,000 from the same place.
So no effect will come in this.
I
Same
will have no
reason.
effect. Why we are doing like this? Because it's an MCQ.
Okay.
Okay.
Hmm.
Buildings are to be revalued at 250,000 and this had cost of 20,000, accumulated 200,000 and accumulated depreciation 50,000. So what is the
Okay.
carrying value of building?
200,000.
Cost was 200,000, accumulated depreciation 50,000.
Yeah.
What is the carrying value of building?
250,000.
Oh my God. Cost is 200,000, accumulated depreciation is 50,000.
So carried value got 150.
150,000.
Uh,
And you revalued it at how much?
250.
That means it is revalued upward.
Yeah.
So what will you add? Revaluation
Adding
of how much?
100,000.
Revaluation reserves 100,000 because building is revalued upwards. So it will increase your capital reserves.
Okay.
Now talk about this.
You subtract 5,000 from retained earnings.
And you will put it to.
General reserve.
So will it have any effect on your equity total?
No, no effect.
Because it's going from one place coming to other place.
Yeah.
So can you give me total equity now?
Yeah, I'll do that.
So it will be 492 plus 7,500 minus 24 plus 100,000.
638,500. D.
Option?
D.
Yes. You understood this, right?
Yeah.
Come on, go. Rate of
A
inventory in turnover is 17 times. What is the numerator?
average inventory upon cost of sales into 100 वो करना है ना?
Third, cost of
Cost
sales.
of sales upon average inventory.
You don't know the formula also?
I got confused. So the numerator is नीचे वाला और ऊपर वाला.
Numerator ऊपर वाला. Denominator is new.
Okay, so the option is C.
Okay, go to the next one.
Oh God, yes. The year-end statement of financial. You have to calculate the return on capital employed. Okay.
Okay. So you have to calculate return on capital employed. Can you give me the formula for ROC?
Profit before operations upon capital employed into 100.
Okay. Okay, capital employed means what?
Profit before operations upon capital employed.
How do you get the capital employed here?
Own funds but plus borrowed funds.
Okay. So if my liability is here, asset is over here. So this is own funds, this is borrowed funds, and this is current liability. And
Yeah.
this is total assets. Are you with me?
Yeah.
Profit from operation is how much?
65,000.
Now let's go to the capital employed. You have non-current assets plus current assets given to you.
Yeah.
That means your total assets is how much?
1 minute.
This
1 3
part is
5.
capital employed. Always remember.
1490.
Non-current assets and current assets is 1350 and 140. So it is 1490.
Yeah, and it's supposed to tally, so same 1490.
Okay, fine. You have current liabilities?
Yeah.
90. So your capital employed should be 1400.
Yeah.
But at the same time, they've also given you this.
This won't come now because it's own funds plus borrowed funds. This I know it won't come.
So this is also own funds, right? Own funds, borrowed funds, and own funds.
Yeah, but
Given
I
you
don't think it'll come.
all information. You can do this way also, you can do this way also.
But answer is same now if I do your way.
Check. Own funds plus borrowed funds, 900 plus 150 plus 200 plus 150, 1400.
Yeah, correct only.
It's the same thing. They've given you any approach you follow, you can get it.
Okay.
So what is your capital employed?
1400 with 3 zeros.
In 200.
Yeah.
Can you give me the answer?
Yeah. One 4.6.
Hmm?
Which statement is correct? Direct costs change in direct proportion to the changes in level of activity.
Is it correct?
Yeah.
Direct cost means a variable cost.
Yeah, so yeah, of course it's
As
correct.
the activity level goes up, variable cost also goes up.
Yeah, correct only. So option A only.
Okay. Go ahead.
A manufacturer operates a bonus system. He provides the following information. A bonus.
Calculate ST in the end. What do they want from you?
How much did Fren earn?
How much did Fred earn for his output of 175 units?
Yeah.
Okay, fine. Now read.
Okay. Output required from each worker is 175 units. Time allowed to complete output is 10.5 hours and Fred took 7 hours. A bonus
Okay,
is
so
paid
how many hours he saved?
3.5.
Okay, fine. Go ahead.
A bonus is paid 25% of the labor costs for time saved in addition to hourly rate of 8.75. So 8.75 into 7 we'll do first.
So first the basic wage.
Yeah, which is
So the hourly
8.75.
rate is 8.75 into 7 hours.
61.25.
61.25. Then he's getting bonus.
Bonus is 25% of labor costs for time saved.
8.75 ka 125%.
Okay.
So 8.75 into 125%. So it's going to get 10.9375.
Yeah, $11 can be round off.
No, into the hours saved. So he saved 3.5 hours.
3.5. 38. 38.28125.
So 38.28.
Hmm.
Now add
99.53.
option.
D.
Option D if they ask you for total wage.
Yeah.
But they want to know how much did he earn for his output of 175 units. Bonus is paid 25% of labor costs.
Yeah, so I think it's 25% into. Yeah, that's right. 15.315.
Bonus is paid 25% of labor costs for times.
Miss, labor cost will be 8.75 now.
Yes.
Yeah, so it's 25% into 8.75.
So 8.75 into 25%. So
It's
this is
2.185. 2.185. And that into the hours.
2.75 into 3.5.
Yeah, that is 7.65. Which is 6.91.
66656 it is, right?
Huh.
So 61.25 plus 7.66, 68.91. Now come on,
Yeah.
tell me what is the wrong that we did?
We took it full. We took the 25. We took 25% of the
We took
total wage rate.
125%.
Yeah, we are supposed to only take 25% of the.
Take 25%.
I
Keep this in
understood that.
mind, okay?
Yeah.
Go to the next one. What do they want from us?
A job cost sheet showed the following estimates. What was the actual
What do they
profit?
want from us?
What the actual profit?
Okay, fine. Material is
680. 125 into 200 we have to do.
why?
Because it's a job took actually 25% more labor hours than estimated.
So labor at $20 per hour.
Hmm.
Overheads at $10 per labor hour. Profit, price of the job. So this they've already calculated, right? The job actually took 25% more labor hours. So can you tell me what is the number of labor hours? Can you try this? I'll just attend a call.
Sorry, I wasn't. Yeah.
So we have labor at 20 per hour and we thought it would take 10 hours.
Yeah, but 25 more percent. No, so 125 into 10 karna hai.
Yeah, 10 into 125%. So it took 12.5 hours.
Yeah.
So labor would be 12.5 hours into 20.
Which is 250.
250. Overheads would be 12.5 hours into 10.
Yeah. 125.
Profit 280. Now they want the actual profit, right?
Yeah, so this won't count.
The total costs.
The total price of job will come now in this.
Price of job is that we quoted.
Okay, okay. So total cost is 680 plus 250 plus 125. 1055.
10
55 minus
1055 minus 1260.
205. Profit is 205. Option A.
Okay, fine. Next one.
Okay. What is the most suitable basis to apportion power cost between two production centers?
You
Uh,
portion the power costs.
okay. Number of units produced.
Why?
Because machinery it won't come, power cost it is. Okay. Then maintenance also won't come and employees also won't come.
One and production center two. So whatever
Yeah. So
use in, we will divide it in that proportion. Okay.
yeah.
Come on. Read the next one.
Question number six.
What is the correct figure for machining department? I want the overheads for the machining department. Okay? And I want the cost per unit for which department?
Machining.
Machining department. Okay, very good. Read the question now.
A manufacturing business makes a single type of product. It has two production departments, matching and assembly. A maintenance department provides service to the production department. Budgeted figures for these departments are shown.
That means maintenance department is the service department and the cost of the service department is to be reapportioned between the
Yeah,
production
between both.
department on suitable basis.
Yeah.
What is the suitable basis?
Uh, Output, proportion to output.
So what is the proportion for output?
200,000 to 50,000.
4 is to 1.
Yeah.
Proportion to output is how much? 4 is to 1.
4 is to 1.
So
So 4 upon
300,000 reapportion on the basis of 4/5 and 1/5.
240,000.
240,000.
Yeah, for machining.
Okay. So 240,000 for machinery. So what is the total cost of machinery? 1040,000.
Yeah. So it's C or D, may say.
It could be C or D. Now,
Yeah, now I have to divide. 1040,000 divided by 200,000. Five point two. So the option is D. The the following data
What
applies
do
to
they want?
the total cost of the job.
What do they want? The total cost of the job. 1 minute, wait.
Yeah.
Come on. What is the total cost of the job? You have direct material as 4,800, direct labor as 2,200. So, hello, Ashita, are you there?
Yeah, yeah, yeah.
So your prime cost is 4,800 plus 2,200, it is 7,000.
Huh.
Machine hours is 240 and direct labor is employed at an hourly rate of 11.
Yeah.
Okay. Production overheads are charged at 25% per direct labor hour.
Yeah.
Can you give me direct labor hours? Total
Direct.
labor cost is 2,200
Yeah.
and the hourly rate is 11. So labor cost divided by hour rate, you will get the number of labor hours.
Yeah.
So what is the direct labor hours? $2,200 divided by price per hour. That is 11.
11.
So your direct labor hours is 200 hours.
Okay, got it.
So overheads is charged at the rate of $25 per direct labor hours.
Yeah.
So 200 into 25 will become 5,000. This is your overhead cost.
Yeah.
Okay. Now, and then amount for selling and distribution overheads is also calculated at 20% of factory cost. Can you give me factory costs? Prime costs plus the overheads, factory overheads will give you the factory cost.
Cost.
So what is the factory costs? This is prime cost. This is overheads.
So 7,000 plus 5,000. That is 12,000.
12,000. In this you have to add what?
Nothing now.
Add?
Selling and distribution overhead is calculated at 20% of factory cost.
So it is 20% of
Factory cost. Yeah.
12,000. So it is how much?
1 minute also. $2,400.
Hmm?
2,400.
Okay, so now tell me.
I said na 2,400.
Add and tell na total cost for the job.
1 minute. 14,400 is option number C.
Okay, fine. Go to the next one. What do they want?
Overhead absorption rates for the 2 production departments.
Overhead absorption rate. So when I calculate OAR, how do I calculate OIR?
Budgeted activity level upon budgeted overhead.
Budgeted overheads
Upon budgeted
budgeted
activity.
activity level. So first see, you have these 2 departments.
Yeah.
Okay, fine. Now since you have these 2 departments, first see their hours.
Machine hours is more in the manufacturing department and labor hours is more in the assembly department.
These 2 options is already gone.
Yeah.
Okay.
Yeah.
Now total cost of the stores department and number of stores requisition. So come on, stores will be reapportioned between manufacturing and assembly on what basis?
It's given over there, na 1 minute.
On what basis?
On the 2 production departments.
On what basis?
On the number of store requisitions.
So 32,800, 3/5 will go to the manufacturing.
Yeah.
And the 2/5 will go to the assembly. Am I correct?
Yeah, yeah.
So 32,800 into 3 divided by 5 is 19,680.
Yeah.
And this will become how much? 32,800 into 2 divided by 5. 13,120. This is budgeted overheads.
So then you have to divide it.
Budgeted activity level for manufacturing is how much?
2160.
And for assembly is how much?
33,600.
So this is 0.39 I'm getting.
Yeah. Miss, the option is D. Huh.
Okay? You understood,
Yeah.
right, what we did?
Yeah. I understood.
What does an increase in marginal cost of a product cost? Marginal cost is what?
The variable cost. A decreased contribution.
If the variable cost will increase,
The contribution will decrease.
contribution will decrease.
Decrease. So it's A.
Which statement describes the usefulness of a cost volume profit analysis?
What does that even mean?
Cost volume profit analysis means contribution to sales ratio.
Oh, okay, fine. To see relationship
Contribution to sales ratio sees the relationship between the cost and revenue at different level of activity.
Yeah, that is true.
Sales minus variable costs is contribution. So it sees the relationship between the cost and revenue. Okay, this is true.
Yeah,
It helps you to set the selling price of the product to achieve the target profit.
that is also true, I think.
It helps you to set the selling price for a variety of products.
False. So it's 1 and 2.
Okay. So with this, we complete Feb March 2023 paper 12.